Hey guys, hopefully everyone is doing well. Today's target is to solve question number 20 and hopefully it's 11th question in a row. And the chapter which we are related with is financial statement, where we usually make profit loss statement at left side and then balance sheet statement on right side. So looking at this question, you can see it is indeed a lengthy question. But we have total of both sides, debit side total and credit side total, which is showing its comprehensive trial balance. That means we will be in ease to select whether it's an asset or expense on debit side, liability and income on credit side. On the other hand, you can see that we have a separate portion for adjustment. Following adjustments are to be made. These are 7 adjustments and each adjustment would have double effect. And obviously, as the first step, we will enter these adjustments and then we will enter all these elements present in trial balance respectively. The good thing is we have answers available for gross profit, net profit and balance sheet. So this was the brief introduction. We are now ready to start our question. Let's begin. As I have told you that as a first step, we will choose adjustment, this part of adjustment as our first step. So let's start. First adjustment is saying closing stock. Alright guys, we will go to direct side and we'll choose cost of goods sold statement, where first step is to write opening stock, then we will add purchases. Then we will subtract if there are any returns. We will further subtract closing stock, and this closing stock is given in adjustment. Amount of closing stock is 257920. 257920, and we'll have to be very much careful. And secondly, you can see that we always be having two effects. So this closing stock would also be entered in asset side 257920, and we will mention its closing stock. So first adjustment is completed. Now we will see what our next adjustment is saying. Allow 5% interest on capital. If somebody is feeling difficulty of viewing these adjustments, so please focus what I have said. I will repeat this adjustment and you will have to focus. Allow 5% interest on capital. For this, there are two places. You may choose operating expense or you may choose other expense. Both are okay. So here we will choose interest on capital. For that purpose, we will see how much amount of capital is available. Here we have capital. Amount is 238800. So here 238800, and you need to calculate 5% as interest on capital. Once again, I'm going to show you that. Look at here. Allow 5% interest on capital. Now here it's very important to mention 238800. What it is? It is amount of capital. And then you have taken 5% interest on capital is calculated. First effect is completed. Now you will go to the liability side, where you will mention capital and then you will add net profit and then you will add interest on capital. This is what you have just calculated. Amount is 11940. Just mention in front of interest on capital. So guys, as you have seen that there were two adjustments, both were having two effects and we have completed. Now adjustment number 3, Depreciate plant 5%. Plant and machinery second number. Amount is 57600. So first you will choose operating expense side, and heading is supposed to be here, but we will write it again. Operating expenses, and here you will mention depreciation, plant and machinery. Here you will calculate. Now let's go and see the amount of plant and machinery. 57600, 57600, and you need to calculate again 5%. I'm sure you people are understanding it well. 57600 is amount of plant, and you will apply 5%, which is given in your adjustment. Plant and machinery 5%. So depreciation first effect is completed. Again you will go to your fixed asset side. Here you will mention plant and machine. Amount of plant and machinery was 57600, and you have just calculated its depreciation. That would be subtracted. Depreciation was 2880. Okay, in this way, effect of this first part of depreciation has been completed, but we have second part. Furniture and fixture. Depreciation upon furniture and fixture is 10%. So you will go to same operating side, and here you will mention depreciation upon furniture. Now let's see how much amount of furniture is mentioned. Look, furniture and fixture 17940 is 17940, and then as you know that it was mentioned that depreciation rate is 10%. So you will come over here and you will calculate 10%. So again, this 17940 is amount of furniture, and we are asked to apply 10% depreciation. First part is completed. Similarly, what you have done for plant and machinery, you will be doing the same for furniture. Amount of furniture 17940, its depreciation 1794. Here you will write depreciation 1794. Alright guys, you have seen that depreciation part for both assets we have just entered, and it's completed. Adjustment number 3 we have finished. Now adjust number 4. Commission earned but not received. It means it's still receivable, outstanding commission. We will go to other income side. Here you will write original commission, and then you will add outstanding commission, which is mentioned over here. Amount of commission is 1200. So here 1200 would be written as outstanding commission. Then you will go to current asset side because it's outstanding income, and this was the title of outstanding was outstanding commission, amount of which was 1200. That was outstanding commission. You will write over here. In this way, dual effects completed for commission. And now fifth adjustment, interest on loan for last 2 months is unpaid. For that you will come over here and see where is your loan, because it is interest on loan. So let's seek out. Look at here, loan from YIPS 6% per annum, and 40,000 is loan. Again you will go to other expense side. All interest would be entered over here. This was interest on loan. Amount of loan, once again I am showing you that amount of loan is 40,000, rate is 6%. So here 40,000 was amount of loan, then you will take 6%, but again in adjustment it has been said only for 2 months. So multiply by 2 divided by 12. This way you will calculate your interest on loan. Let's get back and I am going to show you once again. Interest on loan for last 2 months. That is why you have make an addition in calculation of interest, and that addition is multiply by 2 divided by 12. So what you have learned, 40,000 was amount of loan, then you have applied 6%, and since it was just for 2 months, so multiply by 2 divided by 12. In this way you have calculated this interest on loan which is outstanding. Now you will go to current liability side, or you can choose fixed liability as well since it has not been mentioned. Loan and interest on loan outstanding. So it's important to mention that this interest was outstanding, and please note it down. Outstanding interest would be added. As we have seen that amount of loan which was taken from YIPH, that was 40,000, and the interest which we have just calculated over here is 400. This was outstanding, that is why it would be added. So guys, in this way our adjustment number 5 has been completed. Now we will see adjustment number 6. Write off half of X dishonored bill as bad debt. So bad debt adjustment is started. You will be mentioning each step over here. First bad debts, then you will add additional bad debts, then you will add new reserve for bad debts, then you will subtract old reserve for bad debts. I'm sure that you people have noticed whenever bad debt adjustment comes in any question, we usually write all these 4 elements related to bad debt adjustment. No matter if they are present or not, but you will have to write everything. Write off X, half of X dishonored bill. For that, let's go to sundry debtors. Here, sundry debtor including X for dishonored bill for rupees 2000, but here it is said write off half of X dishonored bill. So you will come over here, you will mention sundry debtors, amount of sundry debtor mentioned over here, and that is 124,000. Write down, and please note once again it is said half of dishonored. Look at here, dishonored bills are 2000, so half means 1000 would be considered as additional bad debts, and then you will be calculating new reserve less new reserve for bad debts, which is also mentioned over here. Next adjustment, write off half of X dishonored bill as bad debts. So first effect of this 1000 is over here, and second, look at here, additional bad debts 1000 you will be writing over here. This was your adjustment number 6. Now adjustment number 7, maintain provision 5% on debtors, but Quite interestingly, it is said excluding total amount, look, excluding total amount of dishonored bill to maintain your reserve. So you will go to your asset side, new reserve you will be calculating. Here you will have to be very much careful. Look, debtors amount 124 less additional bad debt, it would come 123,000, and now you are calculating your new reserve. For that purpose, total amount of debtor was 124,000. You will subtract total amount of bad debt, which was 2,000, and then it is said to calculate 5% multiply by 5 divided by 100. Okay, please focus over here. 124,000 was total amount of debtors, although half of dishonored bill were additional bad debt, that means 1,000. But what he had said, total amount of bad debts would be excluded to calculate new reserve. So that is why you have subtracted 2,000. In this way we have got our new reserve. Once again I am letting you know, please note it down. Look, half of dishonored bill was additional bad debts, and here sundry debtors were having total 2,000 dishonored bill, but you have taken only 1,000 due to this half. Now very interestingly, he is saying 5% debtor excluding total amount of bill dishonored. And here what you have done, please note one again, total amount were 2,000. So 124,000 amount of debtor, total amount of dishonored bill 2,000. You will subtract it, and the remaining amount would be used to calculate 5% new reserve. So we have got 6,100 as our new reserve, which would be posted over here, and both effects are completed. You can see that these are two amounts, 1,000 and 6,100. 1,000 and 6,100 is written over here. So let's get back to adjustment side, and you can see that it was seventh adjustment. It means all of the seventh adjustments with their dual effects completed. We are now ready to post elements present in trial balance to our question. First is drawings 21100. You will go to fixed liability side, less drawings. Amount of drawing was mentioned over here 21100. Just write down 21100. As these are elements of trial balance, there would be only single effect. Then plant and machinery 57600 already written. Look at here. After plant and machinery, we have furniture and fixture 17940 already written. 17940. Then after furniture, we have capital account 238800, and this was supposed to be written over here, but let's write 238800 amount of capital. Okay, after capital we have creditors. This is part of current liability or short-term liability. So here you will mention sundry creditors. Amount of sundry creditors mentioned over here 119260. So here 119260. So creditors 119260 we have written, and after creditors we have loan 40,000. I think this was written, loan of 40,000, you can see already posted. Then we have provision for bad debts 5,000. Yes, it is needed to be written. Provision, old provision 5,000 you will mention. After provision for bad debts, we have cash in hand. This is your current asset. Here cash in hand, amount of which is 6060. Cash in hand 6060. Okay. Then we have cash at bank, and we are going to choose same current asset, cash at bank, and let's see how much is cash at bank. That is 37940. 37940 cash at bank 37940. Alright guys, it means half part is completed. Now we are going to see sundry debtors. 124,000 already mentioned, 124,000. Then we have bill receivable, part of current asset. First time I think we will be in need to get more lines. It's a lengthy question. Bill receivable, amount of bill receivable is 19,000, just mention over here. Then after bill receivable we have opening stock, and that is 179,360. 179,360, that was opening stock. Look, these amounts are very important to be mentioned. 179,360 opening stock completed. After which we have purchases 513,180. 513,180. Look, each amount is so odd. 513,180. So we'll have to be very much careful. These are not straight amounts like in thousands or even in lakhs. Each amount is different from first or second or third. So 513,180 amount of purchase. Then we have manufacturing wages. These are direct expenses. So you will mention over here manufacturing expense. Let's see how much manufacturing expense is. 81940. 81940 is amount of manufacturing wages. Let's see what next. Now we have return inward. This is part of direct income. For that you will mention sales and then returns. Amount of return is mentioned. Return inward 5560. So here 5560. Interestingly, you can see that returns are mentioned even before sales. Alright, the next thing is to write down sale, which we have mentioned over here, and the amount of sale is 712,860. 712,860 is amount of sales. Very odd amount, very unusual. Then we have salaries, part of operating expenses, and here you will mention amount of salaries 22,000. At least this is little comfy, writing amount of salaries. Then we have rent, again operating expenses. You will choose this place. Amount of rent is 11240. 11240. After rent we have interest and discount. We will go to other expense, and here interest and discount. Amount of interest and discount is 11740. Okay, we have written interest and discount. Then we have traveling expenses, part of operating expenses, traveling expenses, and these traveling expenses are 3760. Okay, then after traveling expenses we have repair, again part of operating expenses. After traveling expenses, what we had, repairs and renewals. Amount of repair and renewal 6740. Okay guys, so repairs and renewals completed. Next, so again your attention is needed. Insurance including premium of rupees 600 per annum paid up to 30 and 9th month. And over here look at this date, 31st March. That means third month of 2005, and this is ninth month of 2005. It means 6 months of payment is being made in advance. Alright, so you will come over here and will mention insurance, which was not written before. So here insurance and then less prepaid. And how you will calculate prepaid? First you will see how much amount of insurance was, that is 800. Write down 800 over here. Now we will say how much prepaid. Look, including premium of 600 per annum paid up to 9th month. 6 month payment is advance. So here you will see total 600, but we need only for 6 months. So multiply by 6 divided by 12. 6 months advance insurance. Here you will be calculating 600 per annum, but for 6 month advance payment. That would be subtracted and it would be considered as prepaid. Alright guys, after insurance we have bad debts 7240. For that we have already a fixed place. This is fixed for bad debts, and amount of bad debts we have seen 7240. After bad debts we have commission received, and this would be other income, and we have already fixed that place. 11280, this would be written in front of commission. 11280 amount of commission. Alright guys, you have seen that this was the last amount to be entered, and happily every element was entered at their regarding place. We are now free to start our calculation. First we will see net sales, sales minus returns. We have got net sales. Now we will calculate cost of goods sold. First part, opening stock plus purchases, and you can see that we don't have returns, so directly minus closing stock. What we have done, opening stock add purchases less closing stock, cost of goods sold is calculated. We are now open to calculate grand total of cost of goods sold, where first part of cost of goods sold plus direct expenses, total amount of cost of goods sold has been calculated, and this formula was already present. You have seen that this was total amount of sale, and you have subtracted total amount of cost of goods sold. So we have got 190740. Okay, please note, let's see, 190740 is your amount of gross profit. What you have done, this was your amount of sales 707300, and then this was amount of cost of goods sold. You have subtracted 516560. You have got 190740. So gross profit is calculated. We are now ready to start our calculation regarding operating expenses. Bad debts plus addition bad debts plus new reserve minus old reserve. So we have got adjustment for bad debts. And I think, yes, we have insurance prepaid. Let's make it correct. Total amount of insurance and minus prepaid. In this way, this side is completed. We are now open to take sum of all operating expenses. This highlighted area, you can see that all elements related to operating expenses are being added. Next step is to see operating income. Nothing is present, so 0. Now we will see other expenses. There are three amounts related to other expenses. You will take sum. In this way, other expense side is completed. Now other income. First, you will see that commission is present, and then you will add outstanding commission. So guys, in this way, other income side is also completed. So guys, we are now ready to start our calculation for net profit. First step is to choose your gross profit. This was your gross profit. Then you will subtract operating expenses. Then you will add your operating income. Then you will subtract other expenses. Then you will add other income. So what we have got is our net profit 120886. Let's see, and hopefully 120886, and our answer is also 120886. So guys, in this way our net profit calculation is also completed. 2 out of 4 parts we have solved, and now we will be focusing to calculate asset side of balance sheet. First, fixed asset. In fixed asset, plant and machinery, less its depreciation, and then we will have furniture original amount less its depreciation. This way, two assets were present. We can now take sum of assets. So we have got fixed asset total. After which we will see now current asset, where sundry debtor minus additional bad debts and minus new reserves. So we have got value of debtors. There is no other adjustment. So we are now ready to take sum of all current asset. Please focus upon highlighted area what we have done. So sum of current asset we have got, and now you will see that our total of fixed asset we have done, total of current assets is also completed. There were no investments. Okay, and you will have to see that there are few things present over here. Let's check it out again. 123,000 minus new reserve 6100. All right, so we have got our asset side And now we will see our liability side. For liability side, let's add our net profit, which was calculated over here. Net profit was 120886. So just add 120886. Net profit is written. Let's calculate value of total capital. Amount of capital, add net profit, add interest on capital minus drawings. So in this way, capital amount we have got, after which we have long-term loan plus its interest. We suppose that it's a long-term loan. We are now ready to calculate total amount of fixed liability, after which we only have one amount of creditors. What was this? 400. I think it's not related to us. Let's delete it. We will see later on if it is needed. Okay, so now there are current liabilities over here, and the sum has been taken 510186, and there is little bit difference. Let's check it out. Minus 510186. 300 was the amount, and we'll have to see the amount of debtors first. Sundry debtors, so we'll have to focus upon debtors once again. 124,000 is amount of debtors. Let's check it out. 124,000. Okay, then we have new reserve, and this new reserve, how we have calculated, 5% was calculated. Commission interest write-off, maintain 5%. Okay, and this is absolutely correct, and we have got 116900. So there is a single amount which is related with asset side, and we have not written that. Let's check it out. Our depreciation, that was 2880. Yes, 1794. I think it is correct. Let's see. 57600 minus 2880. Outstanding commission. Commission was outstanding 1200. That is okay. And there is nothing. 257920 was closing stock. 257920. This is okay. Outstanding commission is okay. Debtors are okay. So let's check it out. Cash in hand. If we have 6060, cash in hand 60, okay. 37940 is cash at bank. That is also okay. And then there is only one thing left, bill receivable 19,000. That is also okay. Oh, what was that? In this way, all amounts are looking correct. Let's check our fixed assets. 7086. This sum was taken. Let's check this sum as well. Okay, this is also okay. 11690. So there is a difference of 300 which was not supposed to be present over here. Depreciations are okay. Let's see if 300 amount is present anywhere. No. Oh, yes. 300 prepaid was supposed to be written, but we have not written yet. And where it had gone. Look at here. There was a prepaid. This prepaid 300. It was calculated. Insurance prepaid 300 and second effect was needed. And second effect was current asset, and we haven't mentioned anywhere over here. So for that, let's take this investment little down, and here we will write prepaid. Though it had taken 1 extra minute, but thankfully we have located our problem. Now you will be just getting this amount. Alright, so we have got 510186 liability side and 510186 asset side. Now here is the lesson. Sometimes it may happen that amounts can be mixed, so you are not needed to be shattered. You will have to understand the position. So guys, you can see that this insurance, I will let you know, it was present in trial balance side. Insurance including premium 600 per annum paid up to 31st. So it was present in trial balance. That is why it was foreseen, while this 300 was not present in trial balance, but its calculation was mentioned over there. Normally, when we see any adjustment, dual effects would always be present in our mind. But in this case, this 300 was present in trial balance and it was foreseen. Anyhow, we have located it and you have experienced it. Honestly, I'm telling you, whenever you will be attempting these sort of question in your papers, at that time, what I was requesting you will not have to lose your focus. You should not be shattered. Just relax. It is very common thing. Some amounts can be mispresented or some zeros may be missing. Maybe we have not written some amount. Maybe overstated amounts would be present. So it's a better practice to be relaxed. Don't be shattered and see carefully. And you have seen that within few seconds we have seen our problem, and 300 was initially being foreseen, and we have just pointed out the error. And finally our liability side is 100% equal to our asset side. So 510186 asset, 510186 is your liability. So in this way guys, we have completed our question, and I will be just showing how much work we have done. Look at here, not a single screen is able to capture it, even 50%. This was your direct side where you have calculated your gross profit. This was your asset side where you have calculated total amount of asset, and then this is your net profit and your balance sheet 510186 equalized. All answers are matched. Like this was your gross profit 190740, and here you can see 190740. After that you have calculated your net profit. Look, 190740. Net profit was 120886 and here 120886. It's okay. Then balance sheet 510186, 510186 asset, 510186 is liability. In this way, our question is completed, and I am requesting you, very humble request, to please solve this question for 2-3 times. After solving it, if you still feel anything difficult, you are very open to share your problem through messages, text, or you can directly contact to share your problem. I will humbly be trying my best to answer your question quickly. So thank you very much for your time. It's time to say goodbye. Allah Hafiz.